All right, welcome to The Explainer. Today, we're digging into a pretty wild theory that paints silver not just as a precious metal, but as a potential weapon, one aimed right at the heart of the entire global financial system.
So let's kick things off with this quote, because it's super important to the story here. According to the theory we're breaking down today, these weapons that Buffett talked about, they have a very specific trigger: silver.
You see, the central argument is that silver has been deliberately set up to be a bank killer. The idea is that it's the one thing, the single catalyst that could actually bring down the whole global banking cabal.
And get this isn't something new. The source material claims this price manipulation has been going on for nearly 200 years. It's basically created this giant powder keg in the financial markets, just sitting there, waiting for a spark.
So you might be asking yourself, how in the world could the price of a metal be controlled for so long? Well, the theory points its finger at something it calls the paper game.
The whole theory really boils down to this one major conflict: the fight between physical silver, the real stuff, the finite metal you can actually hold in your hand, and paper silver, which are these potentially unlimited electronic contracts that, for now, decide the price.
And the main tool they supposedly use in this rigged game is a financial derivative. Basically, these are contracts that let people and banks make huge bets on where the price of silver is going, often without anyone needing to own a single ounce of the actual metal.
Now, this theory doesn't just blame some vague market forces. No, it points to a very specific group of powerful players. We're talking big banks, the US government, the Treasury, the Fed, that it claims are all working together to keep that silver price pushed down.
And the source paints this picture of a system that wasn't built overnight. It was built up over decades. It points to these key moments in history, like the Gold Act back in the 30s, or the start of computer trading, as these deliberate steps taken to get more and more control.
All right, so if the paper market is this whole rigged game, what could possibly break it? Well, according to this theory, the breaking point isn't found in some fancy contract. It's found in a good old-fashioned physical shortage of the actual metal.
And this is a really key point in the theory. We are not just talking about coins and investment bars here. More than half of all silver is used in industry. The source says over 1 billion ounces a year go into everything from solar panels to your cell phone. And that creates this massive, constant drain on the actual physical supply. The source then points to a few things as evidence that the physical market is really starting to feel the squeeze. We're talking about reports of refineries being backed up for months and huge cuts in the production of silver coins, all suggesting that the demand for the real metal is starting to outrun the supply.
So this all leads us to the end game, right? The big finale according to this theory. What happens when there's a physical shortage, the price of real silver starts to skyrocket, and it completely contradicts all those massive paper bets that the price would stay low?
Well, the scale of what we're talking about here, it's almost impossible to wrap your head around. The source estimates that the total derivatives market could be worth up to $3 quadrillion. That's a number with 15 zeros. It's just astronomical.
So here's the domino effect they predict. A sudden, crazy spike in the price of just this one commodity could, in theory, unravel the entire interconnected web of global finance. It's like pulling one single thread that makes the whole thing just collapse.
And to put this into perspective, the source points to data showing a single bank, JP Chase, holding a derivative position worth around $60 trillion. That's more than 15 times its total assets. It's used to show just how much leverage some of these players have in the game.
Okay, so after a collapse that big, what's left? What comes next? Well, the source doesn't just predict doom and gloom. It actually lays out a future that it calls the reset. The theory basically describes a total wipeout of the system as we know it. It claims all debt gets erased, mortgages, credit cards, all of it. But so do all our paper financial assets. Savings, 401ks, gone. The result is a complete reboot of money itself, supposedly going back to a gold and silver standard.
And a really critical piece of this new world they describe is a radical repricing of precious metals. The claim is that once the paper game is over, silver's value would explode relative to gold, going back to a ratio that the theory sees as being more historical or more natural.
The source even goes as far as to put a specific date on all of this. It suggests a potential deadline for this whole financial reset, tying it to America's 250th birthday celebration.
And there you have it. That's our look into the silver bank killer theory. It's a pretty dramatic and, you got to admit, provocative vision of financial collapse and then rebirth. It leaves us all with one final question to think about. What would a world that goes through a reset that fundamental truly look like?